All right, this is the day that we had the power outage, and I'm back with power but not internet right now apparently. Maybe I have internet, depends on. Anyway, this was the problem that we worked on Tuesday, and I asked you just go ahead and do these two entries here, and I've included them on the journal entry here. I've also included the little calculation to figure out how to compute the credit to cash and the debit or credit to cash over short. If you add the balance in the petty cash account, which will stay at whatever you initially established the fund at, that's never going to change until you change it with an increase, which they did down here on the 10th. But this is $200. We had $13 in the cash drawer. Subtract them, and that's $187. That is going to be my credit to cash right here. I subtract from that the amount of the expenses, the receipt that I have in the drawer, and if there's a balance, if the amount of expenses is less than the amount of the cash, then it will be a debit. If the amount of expenses is more than the amount of cash, then it will be a credit to cash over short. Just make the entry balance. You know how to do that. Let's go to you need to be able to make these entries, and this was petty cash again. We didn't establish the fund or anything. We're just showing how do we make the entries. Establish the fund for $100. We have these expenses: stamps of 39, freight out of 21, miscellaneous of 6 and 5. We're going to add those together. You don't ever use an account twice in one journal entry. And then travel expense was 24. There could be several entries or several receipts for travel, several receipts for stamps, or whatever. You just add them all up. So that's what I did over here. The balance in the petty cash account was $100. The balance in the drawer was $2, meaning I'm going to make a $98 credit to cash. Add up the expenses, the receipts I have, and they come up to $95. That means I'm short on cash. That will be a debit. When the expenses are less than the amount of the credit to cash, you will debit cash over short. Cash over short, remember, shows up in one of two ways. It shows up at the very bottom of the income statement, either as one of the other expenses or one of the other revenues. If it's a credit balance in cash over short, which is rare, it would be a revenue, other revenue, and if it's a debit balance in the account at the end of the period, it will be an expense. Not a big deal. You close it just like you do all the other accounts. Remember, you close all the income statement accounts with credit balances first, then all the income statement balances with debit balances. All the income statement accounts with debit balances next. Okay, we're going to look at a PowerPoint example. This is actually in the PowerPoint that you can see. This was a bank statement for Laird Company on April the 30th, 2022. It shows the date that they closed their bank statement out at the bank, account number, the last balance. This was the balance at the end of March. Any deposits, that would be credits in the bank's eyes, because the bank sees our account as a liability to them. So a deposit for us would be a credit. It increases our account, our liability account to them. All the checks and any other debits would be here, and the balance would be figured out. Add the last balance plus the deposits minus the checks equals the ending balance this time. Down here in the deposits, let's see. Let's look at the checks first. The deductions from the account. You'll see this EFT here. That is something we probably initiated. This other one for $320 is probably something that we initiated. And that happens to be the case in this problem. No debits are going to happen without us kind of knowing about it. Generally, no EFTs anyway. That's an electronic funds transfer, and the bank isn't going to be transferring funds from our account willy-nilly without our permission. This EFT over here in the deposits, however, we don't know about. Somebody sent us an electronic funds transfer, and we have not recorded it yet. That's the way these things are going to work. NSF, you see, is not sufficient funds, is what it stands for. We got a check and received it from a customer. Think about the debit there. We would have debited cash and credited accounts receivable. So this has come back to us. They have that check got to their bank, and their bank said there's not enough money to cover it. So we need to reverse that entry. We're going to credit cash and debit accounts receivable for this amount for that guy's account, whoever that is. A debit memo. DM here stands for debit memo. $120 and $30. The $30 happens to be just a service charge. The $120 is a fee for using debit and credit cards. So I'm going to go over here and show you how these look on the just written out. Outstanding deposits in transit. These are deposits that we made at the end of business on April the 30th, but the bank, we put them probably in their safe deposit box, their nighttime deposit box, and they didn't actually get entered in the bank's records until May the 1st. They're usually, if you make a deposit late in the day, it sometimes doesn't get into the bank's records, especially if you do it at night. Banks, when I was younger, used to close their books at 2 o'clock in the afternoon, so if you wanted to get something on this day's work, you needed to get it in the bank by 2 o'clock in the afternoon. Nowadays, that's not the case. However, if you deposit something after business hours, then yeah, it's not going to get on the bank's record. So we need to add this to their balance. This is something that we have recorded already, but the bank doesn't have it in their deposits. The next line are checks that we've written but have not cleared the bank. We've written a check, we've mailed it to the vendor. The vendor may have it in his possession or may not. He may be lazy and not getting to the bank. He may be carrying it around in his wallet if he's a young single owner, a single sole proprietor, and he's kind of running the business out of his home or whatever. And then any bank errors that they make, any errors that the bank makes, these are things that will be on their side of our reconciliation. We don't have to make any entries for these. Down below, when it's reconciling items for our books, those are things we have to record on our books. One is this $1,035. That's the EFT over here, $1,035 on 4/9. So we're going to record that. It'll be a debit to cash and a credit to accounts receivable from a customer. NSF check, a check that was returned. We're going to debit accounts payable. Debit accounts receivable and credit cash, where somebody's check was no good when our bank got it. And then we have the debit and credit card fees of $120 and the bank service charge of $30. We're going to record those. And finally, we made an error. There was a check that we wrote, and we wrote it correctly for $1,226. However, the bank cashed it for the right amount. However, we recorded it in our books as $1,262, which is $36 too much. So we will have to debit cash in this case, because we recorded it as a credit to cash and probably a debit to accounts payable. So we'll reverse that. We'll debit cash and credit accounts payable for that $36. Okay. Here is a good bank reconciliation form. Let me pause this and turn off those announcements. I think we're good to go now. Here is, this is a form that I can share with you if you want it sometime. This is something I've developed for reconciling bank statements. When you get into business, you'll make a form like this, probably something like this, that will capture everything that your account does. Okay, so let's put in the ending balance per the bank statement. We'll go over here and find that. The ending balance for the statement is $15,907.45. Can't get it right. Deposits in transit, 12-201-40. Outstanding checks, we're going to list those individually. We don't, because what's going to happen is during the next month, 2 of those may come in and 1 may not, and we'll have to keep a record of all the outstanding checks. If they go on a little bit long, you'll probably want to call the customer or the vendor and see what's going on. Oops. These come off the bank's balance. The bank didn't make any errors, so their adjusted balance is $22,204.85. That should be the same as ours when we get down here. We should end up, our number should match to theirs. If it doesn't, we need to start looking for a problem. So let's look at these guys. Our balance, we'll have to scroll back over to get the balance. The balance for the books is $11,709.45. Items on the bank statements that we didn't have on the books. One of them was 1035. That was let me just go ahead and do it. Label it. That was this thing right down here. The other 3 we're going to subtract from our bank statement: NSF check and the fees. And I'm going to have to go back and look at the amount now. $425.60. Oops. The other was the $120 debit and credit card fees. And you might even just put the account name, bank fees, expense, something like that. And that was -120. -30 was bank service charge. And the errors to be corrected: check number, we don't know what, recorded incorrectly. And that is going to be a positive $36. We're going to be adding it back to cash. Now let's just see what the numbers look like at the bottom. And the winner is, I've got too much money in here. Oh, 2,201.40. That makes sense. Now let's try it. 12,204.85. I'm sure you guys saw it. My error a minute ago. I just missed it. I put over $10,000 extra there. I wish I could keep it. Wouldn't that be wonderful? That's the way you do a bank reconciliation. Very simple. What you do is you find out what is on the bank statement that I don't know about, that I have not recorded, and what is on my account that the bank hasn't recorded, and just stick them in. I've recorded deposits that the bank doesn't know about. That's deposits in transit. Add it to their balance. I've written checks that the bank doesn't know about. Subtract that from their balance. If the bank has made any errors, then you would put that down here. Could be positive, could be negative. Finally, on my side, I put down my ending balance per my general ledger. I add anything that's on the bank statement that I have not recorded yet. I subtract anything on the bank statement that I have not recorded yet. And then I adjust my errors. These are not adjusting entries. These are correction entries. And we should end up with the same balance. If you don't end up with the same balance, you've got a little problem somewhere, just like I did a minute ago. Let's look at another example. Here is, this is a bank reconciliation that somebody did. He took the cash balance for the bank and added the NSF check to it. he also subtracted the service charge, the bank service charge, from the bank's balance to get some weird balance from the bank. He took the balance for the books and added deposits in transit, which we've already recorded, and he subtracted outstanding checks, which we've already recorded. None of that makes any sense. So let's go down here, and I've put it in the same field, same screen, so we can see it. The bank statement, cash balance per the bank, 4714.6. Deposits in transit is 730. Outstanding checks, we don't know what they are. We're not going to issue it, list them separately. 914, that should do it. Where are we on balance? 4530.60. We'll see how close we get. Cash balance per the books, 190.6. Not unusual to have to go 2 or 3 times through this and find all your little errors. And, let's see. NSF check, we're going to subtract that. $630. Bank service charge minus 30, and there we go. Our balances are the same, and we've recorded everything that we should have. Very simple to do. It's really simple. Let's go back over to this PowerPoint example, and now let's look at the entries to record these things. Remember, we're not going to record anything for deposits in transit. That's just a timing difference. The bank hasn't got some of those deposits yet. Outstanding checks, that's just a timing difference. The NSF check, we need to record that because they debited or reduced our account by, in this case, $630, and they're not going to give it back to us until they get a good check. So we need to reduce that from ours and add it back to the customer's balance. Bank service charge, we haven't recorded that either yet, so we need to make the entries for that. So let's go over here to the PowerPoint example, and we will see if we can get the entries over there. I think they're over here, way over there. And the first was the $1,035. We debited cash, credited accounts receivable, just as if somebody had handed us cash. EFT received by the bank for whoever that was. Bank charge expense was the name of the account, so I probably should have used bank charge the expense here. Just good practice. Good practice to put it in there just so you'll have it. Bank charge expense is going to be the total of those, $150. Credit cash for $150. $425.60. We're going to debit accounts receivable and credit cash because that guy owes us that money. Somehow we got to get it. And finally, we made an error in recording a payment to accounts payable. The payment was correct. We just didn't record it correctly. We recorded it for too much. So we credited cash and debited accounts payable for $36 too much. Now we just need to reverse that and debit cash and credit accounts payable for the error. This is the one we just did. Here's another one. And this is how you figure out, this is how you find your outstanding deposits, deposits in transit or outstanding checks. In this case, we're going to do outstanding checks. These two little comments there or labels are important. This is the bank statement on May 31st. This is our cash payments journal for the month of May. And here are the outstanding checks that the bank had at the end of April. So outstanding checks in April, we had check number 254, 255, and 257 for these amounts. So we're going to look for those. Did 254 clear the bank? We're going to look on the bank statement to see if 254 did clear. And sure enough, 254 cleared the bank for the right amount. amount's the same, the date, and the number's the same. 255, did it clear the bank? There's nowhere on here do I see the number 255. So I'm going to put that in blue. And 257, it did clear the bank. We'll put that in yellow. So those two cleared the bank. 257 was the last check that was outstanding in April. And then we wrote 258 in May. Let's look and see if it cleared the bank. And sure enough, we can look over here. 258 cleared the bank for the right amount. 259 cleared the bank for the right amount. 260, did not clear the bank. We'll color it blue because it didn't clear the bank. 261 cleared the bank. There it is. 262 did not clear the bank. No, it did clear the bank. It's out of order. 261, 263, then 262. So 262 cleared the bank. We're good. 263 cleared the bank. We're good on that. 264 did not clear the bank. That leaves us 3 outstanding checks at May 31st. So listing them again, it's 255, 4, 510, 260, 4, 550, and 264, 4, 350. The total, let's see here. Oops. The total checks that didn't clear the bank is $1,410. So as of May the 31st, we still have those outstanding checks. We have 1 outstanding check left over from April. We might want to think about calling that vendor and seeing where our check is. See if he's, credited it to our account, but did he, has he cashed it? What's happened with that check? Then we have these other 2 checks we wrote in May. The 29th, I don't expect that one to come in. The 10th, that's a little long for a lag, but it's not unusual. Okay, that's how you do that. Simple, simple. Okay, we're going to look at one more problem, and this is a bank reconciliation problem again. We're just going to put these numbers where they belong. So the cash in the bank, July 31st. 2542. Bank service charge not recorded by the depositor, and I got to remember to get rid of these extraneous notes. So bank service charge was $10. Oops, it's reducing our account. Cash per balance per books 2549. Deposits in transit 825. The bank collected a $600 note for us. That's a 600. That's a good thing. Interest. $36, and then a fee for the note collection. As you can see, I've worked this problem before and left the little label in there. Fee for the note collection of $15. No interest has been accrued, and outstanding checks on July the 31st is 207. Oops. Now let's scroll down and see how close we are. And the winner is 3,160. We are good in both instances. Green means ready to go. So, that again, a bank statement reconciliation. Very simple if you just keep it super, super simple. Again, I'm going to repeat. Look at the bank statement. And look at your books. What does the bank statement have on it that I have not recorded? If there's something on the bank statement that I have not recorded, I've got to record it in my books. Did it make cash go up in the bank? Then I need to make my cash balance go up on my books. If it made the cash go down in the bank, then I need to make my cash go down in my books. Then you look and see what things are on my books that are not on the bank statement. That should be time-lagged things, deposits in transit or outstanding checks. Then, with all that done, then you just look for errors. Is there an error somewhere? Did the bank record a check wrong, and it happens? Or did we record something wrong? And it's easy to see. You've got the bank statement, and they say a check cleared for $710, and you've got it recorded for $701, so you got a $9 difference. You look at the actual check that the bank sent. You look at your copy of that check, and you look at your entry that you made in the general journal, which, one of those is not going to match. Either your entry is going to be wrong, and both of the checks are right, or, something else. I've seen that sometimes the check is written legibly and everything else. The bank just, somebody just cut it wrong. When I say cut it wrong, somebody entered it for the wrong amount at the bank. One more problem to look at, and this is differently. This is different than we've seen in the past in the few examples we've done so far. They've given us some info, but it's not really clear where we're going with this if you've never done it before. I'll scroll down here and we will try to make it clear. In this case, this is the same blurb as what we saw up there. I just copied this part right here down below. So the bank, June 30th, the bank reconciliation indicated the deposits in transit total $1,100. During the July, the general account cash shows the deposits were made of $18,940, but the bank statement indicates only $7,200 in deposits were received during the month. What were the deposits in transit at July 31st? So we start out with deposits in transit on June the 30th of $1,100. Our July deposits that we made, $18,940. Total deposits, if we had no outstanding deposits, no deposits in transit at the end of July, then the bank should have cleared $20,040 worth of deposits, but they didn't. They cleared only $17,200, which means we must have had 2,840 deposits in transit. The same situation applies for, or the same type of calculation applies for outstanding checks. Outstanding checks at the 30th of June were $1,275. Our July checks we wrote that should have cleared the bank if everything were perfect, $17,850, meaning the bank should have cleared $19,125 worth of checks. They didn't. They cleared $17,050. And so the outstanding checks at 7/31 must have been $2,075. And let's look at situation 3, which is weird if you've never done it before. They've told us the bank deposits that the bank got, the bank statement deposits in September, and the deposits for the books in September, and the deposits in transit at September the 30th. And they want us to figure out what the deposits in transit were in August 31st. So we basically just turned this little thing we did up here on its head. Or let's go to the other one. We just turn this upside down and go back and go through it backwards. The deposits per the bank plus the deposits in transit at 9/30. And so that's 25,400 deposits that the bank got, plus $1,900 worth of deposits in transit. This is a total of 27,300. That could come from only two places. One place was the deposits we made in September, plus any deposits outstanding or in transit at the end of August. So we key in or enter the amount of or subtract from this total deposit to be accounted for our deposits we made, and the only thing that could be left is the deposits in transit on 8/31. And I'll do the next one too. And again, here we are with this. I put the little math or chart in there, if you want to call it that. But here we are. I've just taken this chart and turned it upside down. And I start out with the outstanding checks in September, which were $3,200. The checks that cleared the bank in September were $22,800. And then we're going to subtract from it the checks we wrote. These are all the checks to be accounted for, $26,000. The outstanding checks at the end of September plus the checks that cleared the bank in September, they had to have come from one of two places, either the checks we wrote in September or the checks that were outstanding at the end of August. So we just subtract from the total to be accounted for the checks we wrote, which were $22,000. I'll get it right. And that leaves us $3,700 checks that were outstanding at the end of August. Finally, we'll go to one more entry or example, and I'm not going to work it. This is, I'll send this file to you guys and you'll have it in your possession. Here is a simple bank reconciliation to be done. So I just ask you to prepare the bank reconciliation as of September 30th. And I've given you the reconciled balance. The adjusted balance after you make the reconciliation should be $10,724. And then finally, make your adjusting entries on September 30th, assuming that the NSF check was for a customer on account and no interest had been accrued on the note. So that's the end of that. I will send this recording to you, and you should be good to go. Sorry we had a snafu in class. I will also send this same recording to the other class for their edification and enjoyment. Y'all have a great weekend and stay dry.